This episode is made possible by NetSuite by Oracle and Brex, the AI-powered spend platform.
Hi, this is Brianna Gerber, CFO of Chromadex, and you are listening to the CFO Thought Leader podcast.
This is episode 970.
The governance and control of data that's going to be so important for businesses as they build these AI models. And that's where it really seems to be the main thing that we're discussing with customers. Everybody's talking about AI, and that includes businesses trying to figure out how they're going to use it internally. What we're finding is that many customers are stalling in terms of trying to be able to deploy AI at scale because they don't have the right control around their data. And so that is really where we have a lot to offer our customers, given the space that we're in.
Hi, it's Jack. On today's show, we speak with Dennis Johnson, CFO of Qlik. It's an all too familiar tale among the ranks of senior finance executives. A private equity firm acquires a company, reshuffles the finance team, and reserves the top finance spot for one of its own portfolio CFOs. At Qlik, though, this story had a less familiar ending, or at least one that did not include a portfolio CFO. Instead, back in 2016, when Thoma Bravo acquired King of Prussia, Pennsylvania's Qlik, a seasoned veteran of the latter's own finance team, Dennis Johnson, entered the CFO office. For Johnson, there's little question that his appointment validated the 8 career years that he had already invested with the company. Hear that story and much more about Dennis Johnson, his career, and Qlik after this. 37,025-1. These are the 3 numbers to remember to get the visibility and control you need to make the right business decisions instantly. 37,000. That's the number of businesses which have upgraded to NetSuite by Oracle. NetSuite is the #1 cloud financial system, streamlining accounting, financial management, inventory, HR, and more. 25. NetSuite turns 25 this year. That's 25 years of helping businesses do more with less, close their books in days, not weeks, and drive down expenses. 1. Because your business is one of a kind, you should get a customized solution for all of your KPIs in one efficient system and with one source of truth. Manage risk, get reliable forecasts, and improve margins. Everything you need, all in one place. Right now, download NetSuite's popular KPI checklist designed to give you consistently excellent performance, absolutely free, at netsuite.com/KPI. That's netsuite.com/KPI. Hello, we're speaking with Dennis Johnson, CFO of Qlik. Dennis, welcome.
Thank you, Jack. It's great to be here today.
Yeah, so Dennis, we're going to ask you to look back and share some of those experiences you feel prepared you for a finance leadership role. What comes to mind for you?
Sure. Well, let me start with what I did first coming out of school. And I began my career in public accounting with a regional firm here in the Philadelphia area. And I actually focused on construction and real estate clients. So even though I've ended up in technology, started in a very different industry. But I think everybody knows public accounting is a great training ground. I was given exposure to different industries, mainly construction and real estate, but I got to see a lot of different transactions. So not just traditional audits, but other engagements, due diligence on M&A, financings, and really was fortunate not just to get stuck on any one large client, where I was just doing auditing throughout the year. So that made me versatile. When it was time for me to leave public and go work on the client side, I had a diverse set of experiences across engagement types and different industries that translated well to the client side. And really, in public, I learned to be a professional. There was great training opportunities there. Really develop a work ethic and understand what happens on the client side by auditing those companies. So it really was a great way to set me up and really understand the numbers, have an appreciation for detail. And that really has served me well as a private equity-backed CFO.
Can I ask, just from a timing point of view, and it's interesting, your early part of your career, there was the dot-com boom happening. You didn't sort of jump to a dot-com, I don't believe, but you can mention it to us. When you do step off, and you were at Arthur Andersen, which within 2 years of you leaving, I think it collapses. I don't know if there's a lesson there for you or what you made of it at the time, but it seems like your timing was pretty good. You stepped into a controllership role, is it, or an assistant controller role? And can you reflect a little bit for that very strange place and time where so much was happening?
Yeah, you're exactly right. So I left public. I had spent, as I mentioned, a couple of years at a regional firm focused on construction and real estate, and then went to Arthur Andersen right around in the late 90s and spent a couple of years there. And it was the dot-com boom. And so I was not ready to leave public. I was enjoying my time there, learning a lot. And most people had counseled me that you want to stay in public for at least 5 or 6 years, get to manager level. I wasn't quite there. I was a year or two away. And a former colleague of mine had gone to work for, I wouldn't call it a dot-com, but it was a newly public company, a tech company in the Philly area. And their valuation was soaring, and they were getting a lot of attention. And I went over and met with the CFO, who was a former Andersen person as well. And he basically said, hey, look, this is a unique period of time. You're going to learn as much here in public. There's a lot of interesting transactions. We're doing financings, M&A. And he was just trying to build a really talented team of folks with public accounting background. So I decided to make the jump, and that was January of 2000. And the company was growing very quickly. It had been public for about a year or so. So it was still sort of finding, from a governance standpoint, accounting standpoint, putting its control system in place, and really trying to get stood up as a public company. And almost as quickly as things in terms of valuation and just that environment back then, as soon as things took off, they started to unravel. Not just for the company, but more broadly in the market, and valuations came back down, and companies started to contract. And it actually, as hard as it was, it really was a driver for me in terms of advancing my career, because we had to do more with less. And it's difficult when companies are contracting and going through all that. But I was able to pick up a lot more opportunity. I was able to get promoted a couple times in a short period of time, and it really set me up in two ways. Number one, it was my entrance into technology, where I've now spent the last 20 plus years of my career, and it really made me ready to go be a controller somewhere as well. And so I ended up being there about 2.5 years. It did not play out the way I expected when I made the jump, but it really was a defining moment in my career in terms of preparing me for what lied ahead of me.
Tell us something about controller track. And you mentioned acquisitions. Were you able to get sort of other types of experiences, such as M&A type activity, such as FP&A projects that you might have got assigned to along the way? What would you share with us?
So I think every company is a bit different. I was fortunate in that in my first company, that was a company by the name of VerticalNet that I referred to earlier. That was my first stop out of public. And then I went to work for a company called MedDecision, another Philly area tech company. And it was pretty small. It was about $10 million in sales when I joined. I was the number 2 to the CFO, the first full-time controller they hired. And so even though my title was controller, I did a little bit of everything. And it really is, that's another experience I point to is in terms of what got me ready for what I was going to do later on in my career, because I had to roll the sleeves up, which, not everybody likes to do that, particularly when you get to the controller level, you're thinking it's a little more higher level. This was an opportunity for me to get to understand all areas of the finance organization, treasury, tax, accounting, getting the books closed, paying vendors. And it really taught me a lot about how a finance organization operates. And then as we grew, I was able to build out a team, but I knew things inside and out because I had been there so long. Probably most importantly, though, I got experience on the sales side of things from a commercial standpoint, a go-to-market standpoint. Again, just given how small we were, so I was involved with items like designing compensation plans every year, looking at territory coverage. In an organization of that size, they don't have the resources to build out, really experienced sales operations team. So they sort of look to the finance people to do a little bit of everything. And so that really rounded me out. I had the accounting knowledge from my time in public and my time at VerticalNet. Folks knew I was a subject matter expert around software and accounting and revenue recognition, all topics that are very important. But I had to demonstrate that I could be commercial and knew how to provide flexibility to sales teams so that we could achieve targets and still do that within the accounting boundaries. And so that opportunity at MedDecision was really, that really gave me a chance to demonstrate that I wasn't just a bean counter and a CPA who had spent time in public accounting, but I really was a true business person that could work with the business in order to help us achieve our goals.
And I just want to let the listeners know you did invest 7 years at MedDecision. And you, as you described, you were hired by the CFO. You were the team for a period there. And then the company grew with you, your skills and the activities you became involved in. How am I doing? Am I close? It kind of together, you grew up together, I would imagine.
That's exactly right. That business grew to about 50 million in sales. We took it public back in 2006. It was public for about a year and a half, and then it sold to a larger organization. And so, it was a great way, for me to grow in the role and watch the company grow over time, and then set me up for my next stop, which was joining Qlik.
Just to reveal your decision making at the time, to think back when you joined MedDecision again. Was that really the opportunity? This is great. I have this CFO who I know I can learn from. Was it just that simple? Or what else was making you want to jump?
Well, they had aspirations of going public. And so when I joined VerticalNet, we were newly public. The company had been public for about a year or so. So I came in after that process. And so I was really interested in going through it and leading it in my role as controller, eventually VP of finance at that company. So that was really the driver, certainly being able to learn from an experienced CFO who was looking to bring somebody on and really be the right-hand person to the CFO. That was attractive as well about that opportunity. But it really was, hey, here's a company that can grow. It's in a good space. It has good products. It had great customers, large healthcare payers. And that was really part of the draw. It had all the components. I think when you look for any opportunity, you're looking for good people, good products, and a good market. And if those components are there, then chances are it's going to work out, and you're going to have a pretty good experience.
Well, thank you for that. We always like to expose what the finance leader, what the criteria was at different stages. And the next chapter of your career, as you already mentioned, is at Qlik. And what's interesting, and I think it's worthy to let the listeners know now, you've been there 14 years, of which 5 of them are in the CFO office. But you were there 9 years building your career. You continued to do it. So similarly, if you wouldn't mind, when it comes time to join Qlik, what is it that you see here? But tell us back at that time what it was that you saw. What was the promise?
Yeah, there was a few things. Number one, I wanted to do another IPO because for anybody who's gone through one of those and led that from a finance leader point of view, it's a challenging process. There's a lot of things to be on top of. It's a real grind, and there's a lot of work that goes into it, but also a lot of things outside of your control in terms of market dynamics. And when we did the IPO at MedDecision, it was an elongated process. Had to wait for the right timing to launch. A lot of work historically on financials and re-audits and a lot of complexities. And I felt like I learned a lot that I wanted to apply again and take those experiences and really leverage them. And so I really was looking for a company that wanted to go public, and I just thought I had a lot to offer, given the experience I had doing it before. The other thing that was important to me was finding a company that was larger than MedDecision. So I had good experience in a smaller setting, but now I wanted to scale with an organization that was a little bit bigger. And Qlik at the time I joined was about 150 million in sales. So it sort of checked that box as well. And then the international aspect of it was important to me as well. So MedDecision was a domestic company. We only had U.S. customers, at least at the time I was there. And Qlik was a business that was founded in Sweden back in the early 90s and had really started to grow in Europe before coming over to the U.S. and expanding there. And then it ultimately reincorporated in the U.S. in anticipation of eventually going public. And so that was not experience that I had international and dealing with accounting rules outside of the U.S. and different cultures and learning how to work with folks in different countries. And honestly was something I had to overcome during the screening and the interview process because I didn't have that experience. I had very limited experience in public accounting, but really nothing that translated too much. So I eventually was able to convince the CFO that despite not having that international experience, I had a lot of other qualities that sort of lent themselves to me being able to jump in and learn that, and that it was going to be a good opportunity for me to do that. So those were the key things. And then the products, again, as I mentioned before, you always look for good people, good products, and a good market. And Qlik at the time was really disrupting the traditional BI space and displacing a lot of the older legacy stack vendors and getting a lot of press in terms of what they were doing and growing the top line significantly. So it just seemed like a great opportunity, and it really was. For me, it changed the course of my career. Obviously, I'm here 14 years later, so it ended up being a really great move for me.
I want to ask you about the vision of Qlik today. And again, I didn't realize it's that old a company. It's had several chapters then of growth and different type of business than it was. The cloud era comes just as you're sort of arriving. But the company, did it go public? I know it went private. Give us a little history of the capital structure as you join it. What was it and where did it head?
Sure. So I joined in September of 2009, and the company was already, on the path, for an IPO. They were planning to do that in 2010, and so it was great when I joined. I dove in head first and working with the CFO to get us through the IPO process, and we IPO'd in July of 2010. So the markets were still quite choppy, with the financial crisis, not that far in the rearview mirror, and but we were, given the business and the strength of the business, how it was growing, we were able to go public in July of 2010. So, and then we were public for about 6 years. The take private happened in August of 2016. We were taken private by Thoma Bravo for about $3 billion, and another great opportunity. It was a important chapter in the company's history. But allowed us to address some things in the business that would have been pretty difficult to do as a public company, including not just strengthening our margin profile, but looking at the business model. We were a perpetual licensed software company, so a bit of an outdated model. And in the private space, we've been able to take that business model and transition it to a recurring revenue model, so a subscription and now a cloud business model that allows for much more predictability. It's a much, I'd say, a much better financial model for the company and for our customers as well, and more in line with what you see, software vendors and how they go to market today and how they license their products.
All right. Well, let's find out. Let me just ask you about the company today, and then we'll come back and ask you a little bit about when you first arrived in the CFO role. But tell us about Qlik today? What is the vision here? What are the offerings and the?
Yeah. So as I mentioned, as a public company, and as where the company where the roots were as a self-service business intelligence company, and so what we've been able to do since the take private is a number of acquisitions. I think we're up to about 11 acquisitions since we went private, including two really transformational in terms of the size of those companies. So, today we're an industry leader in data integration, data quality, and analytics solutions. So our technology helps our customers identify opportunities. It helps make them more efficient, better decision making, and really helps our customers thrive in markets today that are quite dynamic. And the technology is underpinned by AI, which really ensures seamless integration, quality, and really insightful analysis that helps drive tangible business results. And so what makes us unique is our focus on transforming AI into more practical, scalable applications for real world challenges. That's really what we do best, is help our customers solve their most complex business challenges. And in terms of what makes us unique against some of the other players in the space, if we think about the larger competitors, we like to think of ourselves as, we provide independent, flexible solutions that aren't confined to a specific tech ecosystem. And then when we look at the smaller players in the market, obviously we have an advantage given the length of time that we've been doing this. So extensive expertise and proven success that really, in our eyes, exceeds the capabilities of some of those smaller new firms in really helping our customers effectively scale AI for the enterprise.
Now, the 11 acquisitions that you mentioned, is that about the technologies themselves or the people? What are you looking to acquire? I imagine you can say both, but at the same time, in particular, I'm wondering if there's AI technologies that you're acquiring to help beef up the customer proposition. But
yeah, we certainly, when you're looking at acquisition targets, both of those things are important, as well as the financial profile of the company. The way I would break down those 11 acquisitions, two were financially material, relative to the size of Qlik. We acquired Attunity, which was a public company. They were about a $50 million ARR business at the time we acquired them. We've really grown that business considerably since that time. Attunity is a data management technology, and so it really sort of helped Qlik move from just traditional data analytics and now really expand the offering into the data management space and help our customers move data around from different sources and targets. And then our most recent acquisition, which is the other really large one, was a company called Talend. It was a fellow Thoma Bravo portfolio company. Thoma Bravo had taken them private back in 2021. Talend really focuses on data quality and data fabric. And so again, really helped us build out our offering in the data management space, combined with our analytics. And then, as you mentioned, AI, we had done an acquisition in the AI space, smaller in terms of what the size of the business was at the time, but a business that was focused on machine learning. And so that technology, for several years, we've been incorporating into our own offerings, combined along with our own organic R&D innovation agenda. So all of these companies that I'm talking about, they obviously had great teams. And so that is part of it, is picking up great talent. There's technology that is there when you acquire it, but obviously technology changes very rapidly. And so you need to make sure that you have the right team in place, and that those folks, as they join the company and get ingrained in the culture, that those individuals are going to be the right fit. So that's part of any screening process when we look at M&A targets.
Just to understand the model today, is on-premise still part of the revenue mix?
There is an on-prem component. We lead with our cloud offering. We're seeing more and more of our sales shift to the cloud, but we really do want to offer our customers flexibility. So for those customers that have use cases that are more suited for an on-prem offering, then we provide that flexibility to our customers. So we found that is a friendlier way to work with our customers. Our customers appreciate that, and we would expect that more and more will continue to move to the cloud. But at this point, we do offer that flexibility for customers that want to deploy on-prem.
Related to AI, I would think over the last year, you've begun having a more informed discussion with certain customers to help them understand better how you're using AI. I think this is one of those companies that, had perhaps been using AI, but hadn't spoken about it or educated its customers about it. You're among many companies that have found that challenging.
Yeah. So where I would start is that we actually have been talking about AI for quite a while. An acquisition we had done several years ago of a company called Big Squid gave us capabilities around machine learning that we've incorporated into our offering. And so we have customers today with use cases where they're using our product for analytics to be able to identify insights and then building in automation that allows them to automate certain actions based on those insights that they're finding in the data and really ultimately drive better outcomes for their organization. So we've been talking to our customers about it. So this, what we've seen recently with, all the focus on AI, we feel like, we've been out there for a couple of years in this regard and talking to our customers about it and making investments in our product and acquisitions, as well as I've mentioned in the AI and machine learning space, where it really over the last several months, where the conversations have sort of gone with customers is around the governance and control of data that's going to be so important for businesses as they build these AI models. And that's where it really seems to be the main thing that we're discussing with customers. Everybody's talking about AI. And that includes, businesses trying to figure out how they're going to use it internally, and all vendors in terms of how they position themselves as an AI vendor to their customers. And what we're finding is that many customers are stalling in terms of trying to be able to deploy AI at scale because they don't have the right control around their data. And so that is really where we have a lot to offer our customers. Given the space that we're in, the value prop for our products and what we can help customers with in terms of data management, data quality, and governance. And so we sit right there, we think in a perfect spot and a very unique spot being able to offer these products and services to our customers.
I wanted to ask you about your FP&A people, where they might reside. I would imagine, and maybe you look at them differently, maybe that's corporate development, but have any of your FP&A people, do they get assigned to M&A work as you evaluate companies, or is that you keep that separate?
So we do have a corp dev team that reports up to our strategy office. We partner very closely with them. My role as CFO, along with our chief strategy officer. But yeah, we plug our FP&A team gets plugged in right away anytime that we're looking at M&A, and not just FP&A, but our tax folks, our accounting folks as well, depending on the size of the acquisition. Some are smaller companies that we're looking at, and there might not be too much in the way of tax assets or liabilities or situations to consider. But certainly FP&A, in terms of working with our corp dev team to model out the business, think about how it fits within our plan for the year. On the more material acquisitions, making sure we're modeling out what that means to the business in terms of revenue that's additive or EBITDA, the cash flow impact, and then what the multi-year plan is. So there's a big role that FP&A plays. They get plugged into just about any acquisition that gets sort of beyond the discussion phase. They're one of the first parties that is brought in. And again, it's a very close partnership with our corp dev team as we evaluate M&A opportunities.
Is there an application of AI that can be used by your FP&A professionals? Is AI part of their discussion, how to scenario plan or whatever it might be as they look into the future?
Yeah, I think there's, FP&A and really all areas of accounting. So I think it's still, again, relatively early in the game in terms of what some companies are doing, but I think there's a number of things that you can think about, whether it's automating some of the formulas that underlie a financial model or forecast or a multi-year plan. Those are certainly areas, even things, if you think sort of outside the box in terms of documenting budget memos, things that get pushed out to the executive team as you start a budget process. More broadly within finance, I think about those fairly routine tasks that can be automated. That's the obvious use case, but now I think as we really start to understand what the technologies are capable of, there's even consideration of some of the more complex tasks like tax calculations or transfer pricing calculations, interpretation of tax law or accounting standards, position paper. So there are huge productivity gains here. I think, again, it's still relatively early in terms of deploying some of those technologies, but I think we really are going to start to see that advance starting in 2024. And it is top of mind for my team as well.
Realizing a number of acquisitions have happened since you first stepped into the role, I'm curious if the numbers that, if we went back to 2018 or the time you stepped in to the CFO office for the first time, the top of mind metrics for you at that place in time versus today, what are you looking at that maybe you weren't looking at then?
Yeah, so the first one I'll start with is annualized recurring revenue, or ARR. That really has become the main metric that we look at in terms of measuring our sales performance, because it's indicative of really, what the revenue profile for the business is going to be going forward, as opposed to as a perpetual software company. One of the challenges is every quarter you're starting from scratch. That revenue you recognize at a point in time, and that's it. You have some maintenance revenue on top of that. But so we've really shifted our focus from recognized revenue more to ARR, and then with that recurring revenue model, the renewal cycles are obviously critical to make sure that we maintain as much of that ARR as possible. So gross retention, net retention, so really measuring how much of our revenue dollars are we retaining, dollars from the prior year, a year later, how much of that did we retain? And then from an expansion standpoint, how much are our customers adding on, which are really the two of the key drivers to maintaining and sustaining that ARR growth. And then obviously on top of that, you have new logo business. And so that's something that we monitor as well. So those are, I'd say, from a revenue standpoint, along with billings growth, that's really what we focus on to measure the top line performance of the business. In terms of bottom line, it's EBITDA. I think that's been pretty consistent over the time frame. We focus on our margins and really think of ourselves as a Rule of 50 company. So taking that top line growth and adding that to margin. So, for example, if you're a 15% top line grower and 35% margin, you're at that Rule of 50. And so we originally aspired to be Rule of 40. Now we aspire to be Rule of 50, and we'll keep pushing that up. But those are the metrics that we really focus on. I would say the one at the end of the day, the metric that matters the most, or at least tells the most complete story, to me, is free cash flow. And that's the one metric that you can't really hide behind, and it incorporates all of these other things. It incorporates revenue growth and bookings growth and spend management, and also how quickly are you collecting receivables? How are you managing your working capital? And so that is really the metric that I focus on. At the end of any given month or quarter or year end, I'm looking at free cash flow generation. And for us, as a private equity backed company with debt on the balance sheet, that's always going to be a metric to me that tells the true story of how we performed in any given year.
Well, great insight there for us. Thank you. We're up to our finance strategic moment question, where we ask guests just to choose one for us. And again, a finance strategic moment reveals how finance plays a strategic role. You've had quite a few of these just last week and maybe this morning, but what would you tell us as a finance strategic moment?
Yeah, it's a really interesting question, and I think as I reflect on my career, I've had so many different experiences that have shaped who I am as a leader and how I approach the role as CFO. But what I really focus on, and this isn't necessarily a point in time kind of thing, but just something that becomes more clear to me as I develop in my own role and see our organization grow and how it's changed over the past few years. And that's that, the most important thing for me to focus on every day is my ability to lead. It's absolutely the most critical aspect of my role, both in terms of leading my team, but the company in general. And so there's a lot that goes into that. But I've always tried to lead by example for my team, and to act with humility, because people are watching every move that you make. It's sort of like, being a parent, knowing that your children are watching you every day, whether you realize it or not. But over time, what I've realized is it's more than just showing your team that you work hard and that you're a subject matter expert. It's every day showing up, continuing to inspire them, mentor them, develop them, really take a vested interest in their development and their personal growth. And then being a leader means being with them in the difficult times. And all businesses go through challenging times. And so as a leader, it's important to be there, support them, be transparent, be direct, and have hard conversations when that's necessary as well. And so those are some of the things that I focus on as a leader. Once I embraced that role as a leader, it was very empowering, because I think, number one, it helped me let go of some of the details and really focus on how I develop people and let them sort of run their functions independently. We've grown from about $100 million business to over $1 billion company in my time here. So in order for me to help scale the company, I had to build the strongest team possible. And, the best advice anybody ever gave me was build a great team and then get out of their way. And that's not always easy, but that's really what I try to do. And then it's really about, how do I stay close to the team? How do I continue to develop them, be there for them for support, point them in the right direction? And to me, if I can do that, then there's really no problem as a team. If my leaders are following my example, if they're cascading that down through their organizations and leading in that same way, there's really not much that we can't fight our way through. And when I reflect on this company at Qlik and how much we've gone through in terms of change, public company, private company, business model shift, all the M&A, a lot of difficult things, all the events of the past several years, and things that all businesses have had to battle through. We couldn't do it without having a team that could deal with that degree of change and great leaders throughout our company. And so that, to me, is, in terms of driving change, it really all starts with the leadership that's set at the top of the company. And so that's sort of what I aspire to do, and I think that's been effective in helping empower me to drive change throughout our organization.
CFOs and controllers, does expense management feel like a necessary evil? It's time to switch to Brex. Brex automates and accelerates spend management with easy-to-use corporate cards, travel, expense management, and bill pay, all on one AI-powered platform. Brex makes it easy to boost efficiency and compliance enterprise-wide and free up your managers, employees, and accounting team for higher impact work. Top companies, from startups to enterprises, are using Brex to automate manual work and transform their finance operations. We're talking DoorDash, Robinhood, Airtable, and countless other industry leaders. Ready to join them? Switch to AI-powered spend management at Brex.com. Great. Well, thank you for that. We're going to move to our mentoring round, where we'll ask you several quick questions intended to inform and inspire future finance leaders. It's interesting. We always ask about the first 60 days you stepped into a CFO role, but we're going to look back to 2018 again. That means for you. But I think one thing, just to make the listener aware of, again, we mentioned the 14 years. You were there 9 years before you stepped into the CFO role. The company was acquired 2 years earlier, Thoma Bravo. And the thought is that, this is where we often see a large private equity firm or what have you. Sometimes they bring in CFOs from their talent bench. They just rotate in their own people. That didn't happen here. You got the tap on the shoulder. So a real validation of the time you spent there for us. But yes, you got it. You got the CFO. You step into the role. Still, there had to be something you wish someone had told you. And again, I call this the past. We're going to give you a pass to go back in time and just tell yourself something at that place, that first 60 days you were there. Again, you knew it all. You had lived 9 years there, but there must have been something you'd tell yourself as a new leader.
Yeah, you're right. I had been here so long. There was plenty. I knew what I was getting myself into when I stepped into the role. But I think the one thing that you can't emphasize enough is just making sure that as the CFO, you're managing the company, helping the board and the CEO manage the company in a way that you're nimble enough to manage through any change. And so it was, late 2018 when I was appointed to CFO, and we were just a year or so away from a pandemic that was really going to turn everything on its side for some period of time. We had no idea what we were about to go through. That was sort of followed by geopolitical events, rising interest rates, currency volatility. There's been so many things we've had to go through. Banking, small banking or local bank crisis, and you just have to be prepared to manage the company through that, and always have a plan, a contingency plan of what you're going to do if things don't play out the way you expect. Most companies have an annual planning cycle. They refresh that monthly or at least quarterly. We certainly do that here. But as I go through the annual planning cycle, I'm always thinking about what are the levers I can pull if things don't play out the way that I expect, right? And you tend to think about that in terms of what can go wrong. But then you also have to think about, well, where would I redirect investment if things are tracking better than I would expect? And so it's important to have that sort of collaboration across the management team, obviously the CEO, CFO working very closely together with the board. But I don't think there's, anybody could have told me that in strong enough terms when I first took the job, given what we were about to go through over the next couple of years. It's just been, obviously a really wild period of time here with all the different things that we've had to manage through. I think the other thing, in terms of growth and being able to manage in the role would be building out my CFO network. I'm really fortunate in that I work in a private equity portfolio with some of the best CFO talent in the world. And there's 40 or 50 other companies, and I get to network with those CFOs and share best practices, share challenges, and we get together in person every other year in a formal conference, and then a lot of informal interaction in between. And it's always time well spent to hear what others are going through. And I think in my first probably 60, 90 days in the role, I didn't have that. CFO job can be kind of a lonely job, and you're trying to demonstrate value and show that you're capable of doing the role, improve yourself. And I think I probably would have benefited from chatting with some others and hearing about the challenges and realizing that, hey, you're not the only one going through that problem. Right? Others have gone through it as well. Others have solutions or similar problems that they've been able to solve. And so that's something that I counsel others who are new in their roles, in CFO roles that I meet, to continue to build out that network, because it can really be helpful as you manage through different situations.
Dennis, we like to ask our guests to reflect a little on the personal side for us. We're wondering if there's something most people generally don't know about you, something you do, something part of your history, anything?
Sure. So one of the things that I really like to do is spend time with young people, and I do that in a couple of different ways. I do some volunteering and coaching, but also I do some mentoring of young people as well. It's something I've always liked to do, both formally through some of the schools I've attended over the years, but also informally through friends or children of friends, and really helping them understand what coming out to work really means when you come out of school, and helping giving them opportunities and perspective from a leader in terms of what they're looking for. And that was something I feel as though I didn't have necessarily when I was in school and studying. And so it's a way for me to give back and really try to get close to people and help them as they think about starting their careers.
Nice. Well, thank you for that. Wonder if you have a book selection for us. Doesn't have to be a business book. Might be something you escape with, something you enjoyed. Anything?
Sure. So the book Moneyball by Michael Lewis, I really enjoy for a couple of reasons. I've read it a few times. I'm drawn to it because of the baseball aspect to it. And for those who aren't familiar with the story or the movie, it's about a low market or a small market, low budget team that has to work with constrained resources and put a winning team on the field. And so I take a lot of business lessons away from that book, in particular, the use of data to really identify hidden insights and think about how you can use those insights to drive a better outcome for your organization, which actually translates really nicely to what our company here at Qlik does. So that's one I read periodically. People think about it as a business book, but I really think of it as a sports book. I think of it as a business book and a data book and an analytics book. And I think the messaging there really translates well to the corporate world.
Well, thank you for that. We are up to our final question where we'll ask you to look forward finally the coming 12 months. We want to know what your priorities are as a CFO for that period. What would those be?
Yeah, so we're finishing the largest integration in the company's history. It's been an intense year in 2023 doing that. We're at the tail end of that work, and our team's done a fantastic job getting through that and really positioning us for success in 2024. So we need to finish that off in the early part of the year. And then I'm really focused on how we accelerate growth and realize the revenue synergies from that acquisition. That's really what I'm looking forward to, is seeing the company now in a normal state, operating Qlik and Talent as one combined company, and really continuing to delight our customers in terms of the products and the offerings that we're bringing to market. And I'm cautiously optimistic that the macro pressure we've seen will start to ease a little bit. We'll see deal making pick up. That'll present opportunities for us in terms of M&A and continuing to build out our product set. So there's a lot of exciting things ahead of us here in 2024, and we're looking forward to getting after it.
Dennis Johnson, thank you for joining us on CFO Thought Leader.
Thank you, Jack.
Hello, Thought Leader listeners. We hope 2024 is treating you well. If you haven't already, we hope you'll pay a visit to CFOthoughtleader.com and go ahead and subscribe to our Mentoring Round newsletter, where we highlight the career lessons and moments of strategic insight shared by our recent CFO guests. Also, LinkedIn users, please go ahead and follow our CFO Thought Leader company page, and you'll be certain not to miss a single Thought Leader video debut. CFO Thought Leader, the #1 thought leadership platform exclusively for and by CFOs. As always, thank you for listening.